We want to provide a solution to a practice question which has been examined. So it's a past question that we are bringing out and how to answer the practical question on advanced audit and assurance. So basically, I'm going to show us the question, but I will be paraphrasing it. Then we learn together how to answer it from GJAMES Associate Channel. For those that are just watching, my name is Gbenga Olatunji FCA. So this is a practice question and a past question from ACCA, and basically an auditor went to the field, and on the field there were some observation. The observation was that out of 5.5 million revenue, 3.3 were actually on the accounting system. And he inquired about the reason the 2 million, the remaining 2 million was not there, and the accountant was able to tell the auditor now that he had contacted and discussed with the boss, but the boss is in charge of the transaction. So the accountant, the auditor now rather, went to the accountant, to the CEO, to the boss, that this was our observation. Out of the 5.5 million revenue, 3.5 was disclosed in the accounting system, and we could not find 2 million, even though we know that you were in charge of it. The CEO, who happened to be the founder of the business, equally agreed that he was aware of the transaction and that also the transaction has been done and the 2 million has been passed on electronically. So he provided the evidence of electronic transfer, but now we have a question at hand. And the question is this. We are to discuss the implication of the circumstance described by the audit senior and also explain the nature of any reporting that should take place by the audit senior. The audit senior was the one that went to the field. So, especially for those of us that not have field experience and are about to qualify, issues like this can disturb us in the exams. How should we approach it? Basically, looking at this question, you find out that it's a question on money laundering. So it's a money laundering question. Please don't forget that. And because it's a money laundering question, there are ways we need to deal with it. First of all, for us to get the greater part of that 6 marks, we need to define what money laundering is. We need to define what money laundering is. And after your definition, you need to give us stages of money laundering. There are 3 stages to money laundering, and all this will be discussed right about now. And after that, you need to go to part B2 and answer it. So let's begin to answer. So how should you define money laundering? How should you define money laundering? Money laundering is the process by which criminal funds in criminality may attempt to conceal the original or the originality of proceed of their sales or of their activities. Please don't forget that is the process. You need to mention it in your answer as the process of concealing money laundering, of concealing proceeds of criminality. And the aim is to transform the dirty money. We call it the dirty money because it's not clean. It's not money that anybody can go about and tell that this is how I make the money. So transformation of the dirty money into a clean money. That is why we say the money is being laundered. Of course, the picture that I just showed us can give away what we are talking about already as money laundering. So we are talking about money laundering. Having given the definition, what are the three stages of money laundering? You need to mention it. You need to mention, first of all, that 2 million cash that was received and did not pass through company's initial account will be placed. We call it placement. So the first stage is placement, in which the cash-based business is, first of all, retired, looking for how to go about it. So they keep it somewhere, warehousing it, and after that it has passed through placement, they will begin to layer it by electronic transfers to overseas and the like, in piecemeal, that is little by little. One of the reasons that 3.5 was disclosed and 2 million was not disclosed was because that aspect of 2 million is not that clean. And this deals with the aspect of our audit experience that we call professional skepticism. Professional skepticism is the mindset of auditor that asks question. Why is it that we do not allow this money to pass through our accounts? Why do we take that large cash amount, especially in countries in which cash transactions are discouraged? Why do we still have 2 million cash transaction collected? So it's an evidence of, or it points to money laundering. So that's 2 million we pass through placement, then layering, giving it out in piecemeal into different overseas account, different places, and after it has passed through layering, then they are going to integrate it. It's going to be integrated into the business world, into the economic world, as money that is clean in the economy, because nobody will know the origin of that money again. So that part A, 6 marks, discuss the implication of the circumstance described in the audit senior's note that is sent to his manager by informing him. We need to disclose that it is money laundering transaction or we perceive money laundering, and define what money laundering is, and give us the three stages that is going to pass through. Also, we need to let us know that owner posting transaction, of course, is very wrong. It's an evidence that something may be wrong if you have an accounting departments and people that you are paying for that. Why do you need to take such an amount? Also, secrecy and aggressive attitude. If you continue in the passage, sorry, I just quickly scanned through it and disclose it to you because of our time. The CEO was negatively reacting to the accountant when the accountant tried to ask the boss about the money. So that's aggressive attitude towards the employee too is an indication that it's a money laundering transaction or a money gained in secrecy. So it's part of what you need to mention. Also, audit to be considered very, very high risk. The audit firm need to know that that client is, and the client and their work is an high risk audit, and they should tread carefully in their opinion that they are going to put on the document. So it's an high risk. Also, the senior may have tipped off the client. The senior, that is the auditor, might have tipped off the client. Of course, they may have known that the auditor perceived it wrongly and the like. And in reporting, he has primary duty to report. Okay, we are going to go to that in part B of the question. So don't let us jump the gun. So the part B of the question, we are going to disclose that, which is explain the nature of the reporting. So let's go into the reporting now. Let us finish about the first question. So the firm also may consider withdrawing from the audit. The firm, the audit firm may consider withdrawing from the audit. You need to mention it. Of course, their revenue may be lost if they do that, but they will have saved their name and reputation, which is key in accounting practice. So they can consider to withdraw from the engagement. Also, the last but not the least I'm going to mention is that the consequence for tipping off, the consequence of making them aware that we flag it and the like. It's possible that the CEO run away. It's possible that he may get arrested if he or she stay. It's possible that at the end of the day, nothing to happen, especially in some region of the world, but not in uh, some countries that are well developed. So tipping off about it could have informed so many things and so many decisions to be taken, and also the officers of the law. Now, the reportage. How should we report? How should the senior auditor have handled it that went on the field? Of course, telling his immediate audit manager is good and important, but he has the responsibility, or she has the responsibility, primarily to have informed MLRO, that is the money laundering reporting officer of the accounting firm. That officer has the responsibility to immediately report to the officer of the law in the country. And don't forget, when we're talking about the Money Laundering Act actually permits the professional to report, and without having any consequence of our other professional ethics. It's not going to affect our professional ethics of non-disclosure, because it's an act that actually assist us and empower us in a circumstance like this to report to the government. And not reporting rightly even can affect the career of that senior, especially if the manager he had reported to did not do anything about it, and government eventually got to know that there is an unclaimed business that their client is engaging in, and they audited and they are not flagging it. So at the end of the day, both the accounting firm and the individual, that is the employee of the accounting firm, that senior, is going to be penalized. So it is important that the reporting is done properly, and he needs to report immediately to the MLRO, that is the money laundering reporting officer of the firm who has the responsibility to connect with the government immediately. And failure to report is itself an offense, like I said. And as they disclose to the government, they need to identify and report the identity of the organization and of the people involved as much as they know about. So in recapping from GJAMES Associate Channel, if you are just joining us, we like that you subscribe to the channel, click notification, click all and subscribe, share to the channel. I want to believe you've enjoyed value and more of this will be done. We've discussed what money laundering is. We had discussed the 3 stages that is going to pass through. We had spoken of integration, we had spoken of layering, and we had spoken of the placement of the fund. We had equally answered the question, that is, what they will do and how they should report, and the implication of the circumstance that we met on the field. From GJAMES Associate Channel, Gbenga Olatunji FCA, we add value to life, we add value to your businesses.